Welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate this trading session with actionable strategies, sector trends and most importantly your queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by a guest on the show. But before we introduce our guests, let's see what the global handover looks like. Europe closed marginally lower as inflation worries gripped the market. Stoxx 600 ended about 0.3% lower, with tech stocks losing 1.2%. To lead losses as most sectors and major bourses slid into the negative territory. On the Wall Street, meanwhile, S&P 500 gained nearly 1%, rising for a second day on the trot. The Dow advanced more than 260 points. Nasdaq Composite rose 0.9%. However, stock futures fell marginally in overnight trading Tuesday after 2 consecutive days of gains on Wall Street. Investors shrugged off some signs of an economic slowdown ahead of a key inflation reading later this week. Shares in Asia Pacific rose in early trade. Investors keep a close watch on the Reserve Bank of India's latest interest rate decision expected later today. SGX Nifty is indicating to a positive open, however, for domestic markets. Let's get going and discuss some stocks that are likely to be in the spotlight today with Rajesh Palviya of Axis Securities. Rajesh, thank you so much for touching base. How's the trade setup looking? An important day for the Indian markets. RBI's commentary, growth projections, rate hike, all of it will be on the cards. So talk to us about the trade setup and then we'll move on to some specific names.
Yeah, good morning, Karanya. So, yes, it's a very important day for the market because, since last 4-5 trading sessions, especially, we are seeing that, Nifty is consolidating in the range only, after, a strong recovery from the lower level of 15,700. Now, Nifty is facing a resistance at around 16,600, 650 zone, which is very important for the market as of now. So since last 3-4 trading session, what we have observed that, it's a trading in range 16,400 to 16,600 is the range as of now. But looking at the scenario now, we are trading near to this lower band of this consolidation range. And put writers are active at 16,400, 16,500 strike. Despite we are trading below 16,500, still put writing positions are still open at those levels. So which clearly indicates that, market is waiting for, some pullback action from current level. For today's setup, if Nifty manages to trade above 16,460, 16,470 level, then some pullback action should continue during the day and possibly upward resistance area is at around 16,550 to 15,570. This is the level which are likely to act as a resistance for any pullback action in the near term basis. So any decisive breakout above 16,600 will decide the direction further upward. Otherwise, will remain for some more trading session in the range only. Breakdown below 16,350 will open for the lower trajectory towards 16,200. But as of now, data setup is indicating that there is a possibility that we might see some pullback action in today's session, and market may trade on the higher side towards 15,550 zone. So this is the setup as of now for the Nifty.
Okay. What about Nifty Bank? Because I'm sure a lot of traders out there and a lot of investors as well will be keeping a close eye on Bank Nifty. And if you'd like to flag off any individual names as well from the banking space.
Yeah, definitely. So the whole interest on the trading side would be on the Nifty Bank only because it's a big day for banking stocks as when we have, outcome of this RBI policy. So a lot of volatility is going to play out in the Bank Nifty. But looking at the setup, we are holding 34,800, which is very important level for Bank Nifty as of now on the near-term setup. If we breaks below 34,800, then possibly some more, supply pressure we can see towards 34,400, which is the next major important support area for this, upward momentum which we have witnessed in the recent past. However, on the higher side, 35,200, 300 is the key resistance area. If Bank Nifty manages to cross above that level, then possibly another 400, 500 point rally can continue towards 35,800. So looking at the call put concentration, 34,800 to 34,500 is the key level as of now on the put writer base. On the call writing front, the 35,000 and 35,500 are the key resistance area. So if at all a Nifty Bank manages to cross above 35,500, then there would be a short covering action we can see during the day. Especially in the banking space, Kotak Bank is looking attractive. We can look at Kotak Bank, and since last 3-4 trading session, the stock is consolidating in very narrow range. Even especially in the last hour of the trade in the yesterday session, we have seen some buying interest in the Kotak Bank, and possibly if the stock manages to cross above 1865, 1870 level, then possibly Kotak Bank can lead towards 1900, even 1920 level. So one can focus on Kotak Bank, especially on the banking space for today's session.
Okay, so these are some names, guys, that you can keep on your watch list. But as far as our stock spotlight is concerned, of course, NBFCs and banks will be the flavor of the day, largely going by, the historical trend of how these stocks react on a policy outcome day. But let's talk about some individual names. I'd like to flag off the likes of Hindustan Copper, Zee Entertainment and several others. Let's start with Hindustan Copper. They have come out with a corporate announcement last evening. Their mine at Jharkhand, the Surda mine, they've started or rather restarted operations there. After a renewed lease that they've received from the Jharkhand government and obtaining all the environment clearances. So resumption of business activity, definitely some positive development there. Hindustan Copper is not a name that we discuss very often on the show as well. Rajesh, would love to hear from you the technical aspect of this particular counter and how is it likely to play out?
So overall, if we analyze the whole metal pack, some bit of recovery we have seen from their oversold territory. But especially if we discuss this Hindustan Copper, stock is now trading and approaching towards its immediate resistance area, which is very critical for this upward momentum which we have witnessed. 108 is the very important level for this up move. If stock manages to cross above 108 level, then possibly some more pullback action towards 116, 118 can be seen in the stock. Stock is now trading about 20-day moving average, which clearly shows that some strength is coming back in the on the near-term setup also. So as of now, I would suggest to keep stop loss of 100 rupees and the immediate target is 108. And if stock crosses that level, then possibly 114, 116 target can be seen in the near term to short term basis for Hindustan Copper.
Okay, all right. What about a Zee Entertainment? There's some bulk deal that has happened there. LIC has bought an additional 2 lakh shares of Zee Entertainment via open market transactions. And now the stake that LIC owns in Zee Entertainment has risen from 4.98% to slightly above 5% level. So some buying that has taken place by the behemoth here into another behemoth company. So talk to us about Zee Entertainment and how do you like the technicals of it?
So, especially if we analyze the setup since last 2 weeks, stock is facing the resistance at around 50-day moving average, which was at around 260 level, and again we have seen a supply pressure has been there in the stock from those level. In the recent past, we have seen that stock has taken the support at around 235 level, but in the last trading session, especially there was short built up has been witnessed on the derivative front, and now looking at the setup, we feel that some more pressure we can see in the near term basis towards 230, even 225, which is the next important major support area. So if stock continues to trade below 240 level, then possibly some more pressure we can see in the stock towards 230, 225, which is the important area where again one should review the stock because it's a multiple support area at 225 level, and multiple times we have seen that again and again stock has shown pullback action from those level. So wait for another 3 to 4% corrective action in the stock, and then one can look at to buy the stock at lower side.
Okay. On the flip side, while LIC has bought stake in Zee Entertainment, there's Fiem Industries, where SAF India 4 FII Holdings has offloaded slightly more than 1.5 lakh shares, and this has happened at an average price of 1,038.2 rupees a piece. Fiem Industries currently, I think it shut shop yesterday at 1,035 levels. In the last 1 month, the stock has done pretty okay, I would say. It was sub 900 levels in early May, and right now it has surpassed that 1,000 rupees, 1,035 levels actually is where it's perched at. So do you think this upward momentum will continue?
Yeah, definitely. So, if we analyze the Fiem Industries setup, stock is now trading above 50 to 100-day moving average. So, whatever pullback we have seen, that is clearly showing that some strength is coming back on the near term as well as on the short term setup. But still, stock is struggling to cross its 200-day moving average, and it's a fifth consecutive day where stock is facing the resistance at around 200-day moving average, which is lying at around 1,080 level. So looking at the setup, yes, strength is visible. Indicators are turning towards the positive side. 1,080 is the important level. Once the stock crosses that level, then possibly we can see another round of buying action in the stock, and then stock can scale up towards 1140 to 1150 level on the higher side. So one can remain long in the stock, keep stop loss of 1,000, and we are expecting that kind of strength which is visible on the near term as well as on the short term chart. So sooner or later we will see a breakout above 1,080, and then possibly target would be 1140 to 1150.
Okay, all right. Like I said, the flavor of the day, despite what news flow is, going to be banking stocks, and we're getting a lot of live queries on our feed as well. Kamalaja wants your view on HDFC Bank. We have another viewer who wants your recommendation on SBI. His handle name is TSS. We don't know the viewer's name, but HDFC Bank and SBI. Is there a favorite that you have, Rajesh?
So definitely I will go with the HDFC Bank in the current setup, because stock has corrected significantly in the recent past, but the kind of bottom formation activity is going on. The stock is clearly showing that once stock crosses above 1380, 1400 level, then possibly another round of rally we can see in the near term as well as in the short term. So HDFC is looking more promising, and the strength is visible on the near term setup. So my advice would be to go long in HDFC Bank with stop loss of 1330. And a higher side 1380 is the key resistance area. If at all stock crosses that level, then possibly 1420, 1440 would be the near-term target for the stock on the higher side.
Okay, all right. Request you to stay on hold, Rajesh. We're now joined by Sujan Hajra. He's the Executive Director, Institutional Equities and Chief Economist at Anand Rathi Group. And he's here to discuss the likely RBI action today, the road ahead for markets, and things to look out for. Thank you so much, Mr. Hajra, for taking time out. Let's talk about the big question, which is the RBI rate hike today. Is the market pretty much factoring in and is ready for another round of rate hike? We, of course, saw that surprise rate hike when there was a knee-jerk reaction in the markets. But how are things likely to play out now?
Good morning. I think it's a Hobson's choice right now for RBI, that they have to go for a rate hike given the way inflation has behaved. The real question is how much rate hike? And there the view is split. It's varying between 25 bips to 75 bips. My sense is that the more likely range, we have penciled in a 40 bips increase. But we think a significant probability that RBI might do just a 25 bips rate hike. As you rightly said, they are in the recent past they have done a 40 bips rate hike, and on the top of that another 40 bips rate hike or more rate hike looks slightly unlikely. So at least our 25 bips rate hike should be factored in.
Okay. So what is it that the market will be watching out for in terms of commentary from the governor?
Yeah, sure. I think there are three commentaries of RBI which will be very important here. The first thing is that is RBI revising the view on inflation again? As you remember, while RBI did the last policy before the latest inflation number came out, but there are a fair bit of understanding that perhaps RBI had the advance number. So they have already reacted to that number, and their forecasts have already changed. So I won't expect a drastic change in the inflation forecast by RBI from there. But RBI might highlight the significant upside risk to inflation, which still persists. This is the first thing which the market will look out for. Second thing, after the rate hike, the governor has many a times come ahead and talked about that while there is a need for a rate hike, both the rate hike and the liquidity withdrawal will be in a very sequenced manner. So I think another guideline on how RBI is talking about the glide path for rate normalization, that will be pretty important. Yeah. And the third thing is obviously on the liquidity side, what they are going to do.
Right.
Last time they did a 50 bips CRR hike. So whether they are going to mop up more liquidity, that's important.
You know, later this week, there's also going to be the US inflation data. That's also something that globally markets will be looking out for. But talk to us about the fact that we've already seen a rise in the dollar index. The US Treasury yields are strengthening. Will these elements continue to put pressure on markets and even markets back home going forward? What is your prediction?
Yeah, obviously, if you look at the inflation problem, it's a global problem. If you look at the G20 average in November 2020, the G20 average inflation, retail inflation was about 1%. It's pretty close to 8% now. Now there is a distinction between the inflation in the developed countries, the OECD countries, and the inflation in the emerging market countries. First of all, if you look at while the inflation has gone up everywhere, the inflation has gone up far more in the developed countries. Because not only there is supply-sided factors, which all of us are facing globally, they also have very significant demand-side factors which are taking the inflation up.
Right.
Now, obviously, market is expecting 250 bips rate hike in US in the next two policies, and perhaps at least another 50 bips rate hike thereafter.
Okay.
So in that sense, market is factoring in a lot of things. In the context of 10-year yield, as you said, there has been a strange development. If you look at during the second half of May, the yields are actually coming down. After hitting 3%, it went down all the way almost 2.7%, but it has started rising again. Here, the major factor, perhaps the inflationary expectation is rising again. And apart from that, what we think is that the liquidity withdrawal which US is doing,
right,
and the kind of hawkish guideline which the Fed is giving, these are all the factors which are impacting. And if you look at in the context of exchange rates, first of all, if US is aggressively increasing rate, obviously, the interest rate differential between US and other industrialized countries are moving up. So that's one reason why dollar is appreciating. Secondly, dollar is a safe haven asset, and the global economy in the near term looks like the growth is going to come down. So this also is playing out. And third, as I said, that US is actively withdrawing liquidity.
Okay.
That is also, in a sense, should put pressure on dollar to appreciate. So these factors are there. Obviously, in the near term, these developments, the yields going up, dollar strengthening, growth coming down, aggressive monetary tightening, all these factors, that's a concoction which is not very favorable for the equity market. Right. So our near-term outlook for the equity market, both global and Indian, remains cautious with clear possibility of the market going down further from here. What I would say a major part
just
of the
one thing I wanted to, sorry to butt in, but I just wanted to ask you one thing. You said your outlook is largely positive on local and global markets. But locally, if one wants to look for alpha possibilities or if one wants to find where the strength lies, which pockets do you like?
No, so what I was telling is that the near-term outlook is negative, but the medium to longer-term outlook looks positive.
Right.
Now, if you have to talk about pockets, obviously we think that one of the most battered sector and which we would expect to turn around in a major way is financials. So we like banks, particularly the private sector banks.
Okay.
And despite significant performance earlier and significant amount of correction in the last 6 months, IT is another sector where we are pretty positive. And on the back of government thrust towards capex, the capital goods, cement, that space, construction, infrastructure, we like those spaces also. And as such, we think if the market is slightly choppy, the large cap should do better than mid cap, at least in the near term.
Sure. Point noted. Sujan, thank you so much for taking time out and chatting with us and sharing your view on RBI's rate hike. That is pretty much what the market is expecting at this point and how the markets will react eventually. Let's touch base once again with Rajesh. Lots of queries coming in your way. First up, let's talk about Naveen Kumar. He wants your view on sugar stocks. Any names you like here?
So clearly, I would go with the Balrampur Chini. We have seen, after corrective action, stock is now recovering from the lower level, and now stock is sustaining above 400 level, which is clearly showing that, strength is coming back on the near-term setup. Even if we analyze the daily chart, stock manages to give its down-sloping trend line breakout on the daily setup also, which is a sign of, reversal again. So we believe that, Balrampur Chini can do well in the near-term basis, and possibly upside target for trading perspective is 430, 435. One can keep stop loss of 405.
Okay. Moving on then to next question. This is from Pushpraj Gavai. Wants your view on ONGC. Is that a name you like?
Yeah, definitely. So stock is showing strength, and especially in the last trading session, we have seen a very smart, up move in the stock, and now stock managed to give breakout above 158 level, which is the near-term resistance area. So now if stock continues to trade above 158 level, then possible another round of buying action can take stock further higher towards 168 to 170, which is the next target for the stock. So keep stop loss of 156 at the current level, and for upside target of 166 to 168.
Okay. One quick query on ITC. This has been a phenomenal stock for its shareholders, especially in the recent past. Last 1 month also the stock has done fairly well despite, all the market volatility that was playing out. This is a question from Selva Nayak, and talk to us about how you foresee ITC playing out in terms of technicals.
So after a strong run-up, the stock is now consolidating in range, and it's taking a place on the daily chart. We can visualize that stock is forming a flag formation. Once the stock manages to cross about 280 level, that would be a breakout of this flag formation. And then if once this breakout happens, then possibly stock can move further higher towards 300, 310 level on the higher side. So buy on dips would be strategy in ITC. One should remain long in the stock, and until the stock not breaks below 260 level, our view would be remain on the buying side. Whatever dips will come towards this 265, 260 is a buying opportunity. Keep stop loss of 260. Upward target we are expecting in short term or in positional basis is 300, 310.
Okay. Rajesh, we are running out of time, so I'll just jump on to your stock picks. What are the names that you would like to highlight to our viewers today?
So we are focusing 3 stock majorly. One is from automobile, that is TVS Motor, expecting target of 770, keep stop loss of 730. Another stock is from power space, that is Tata Power. Especially in last hour of trade, stock has witnessed good buying interest. So we are expecting Tata Power can move further higher towards 245. Keep stop loss of 228. Another stock is from defense, that is HL. Strong momentum is there in the stock across all time frame. Stock is in bullish zone. So we are expecting 1950 for upward target for HL. Keep stop loss of 1865 to go long in HL also.
Okay, great. HAL, Tata Power and TVS. Thank you so much for flagging these off for us and for joining us, Rajesh. It's always a pleasure chatting with you and finding out the market insights and the market levels that you should keep on your radar. Guys, thank you so much for tuning in. That's all we have in this edition of Morning Trade. Stay tuned though. Markets with Santo at CJ comes up next.